The cryptocurrency market often looks irrational. Prices swing wildly, narratives flip overnight, and public opinion moves faster than the technology itself. But the truth is, crypto isn't broken, and it's not random. What we're seeing right now is market sentiment reacting to a system that's still early, still maturing, and still colliding with the real world. To understand where crypto is going, we need to understand why it behaves the way it does today. What market sentiment really is. Market sentiment is collective psychology. In crypto, it matters more than almost any other asset class because the market is global, always on, retail heavy, and narrative driven. In the short term, prices don't move on technology alone. They move on fear, greed, uncertainty, and expectation. Right now, sentiment is divided. Long-term investors and institutions are quietly positioning. Short-term traders and retail investors are emotionally reacting to price action, headlines, and social media. That disconnect creates volatility, but volatility is not the same thing as failure. Why the market is acting this way right now? We're in a transition phase. Crypto is moving from an experimental, unregulated environment to a structured, regulated, utility-driven one. That transition creates friction. Several forces are shaping current sentiment. 1. Regulation is becoming clearer, which reduces chaos but also removes easy hype. 2. Institutional money is more cautious. It doesn't chase pumps, it waits for infrastructure. 3. Speculation is being slowly replaced by utility, and that takes time. This is why meme-driven cycles feel weaker, while infrastructure-focused projects quietly keep building. Chains like Cardano, for example, prioritize long-term scalability, governance, and real-world use over short-term hype. That doesn't always excite markets immediately, but it's exactly how sustainable systems are built. Why crypto feels slow but isn't. One of the biggest misconceptions is that crypto adoption should be fast, but real adoption looks boring before it looks revolutionary. Think about the internet. It existed for years before people trusted it with money. It took decades before it transformed daily life. Crypto is doing the same thing, improving settlement systems, enabling permissionless finance, creating decentralized governance, expanding financial access globally. These changes don't show up as price spikes first. They show up as infrastructure, partnerships, and quiet integration. How crypto is transforming everyday society. Crypto's real impact isn't speculation, it's optionality. Today, people can store value outside traditional banks, send money across borders instantly, participate in global financial systems without permission, verify identity, ownership, and data independently. In regions with unstable currencies or weak institutions, this isn't theoretical, it's practical. Decentralized systems give individuals choice, and once people experience choice, it's very hard to take it away. That's why adoption doesn't reverse. It compounds. What this means going forward. The crypto market feels uncertain because we're between eras, the hype-driven past and the utility-driven future. Sentiment will continue to swing. Prices will rise and fall. Narratives will change. But underneath all of it, the direction is clear. Crypto isn't just a market anymore. It's becoming infrastructure for how society moves value, trust, and power. And transformations like that don't happen loudly at first. They happen gradually, then all at once.